Oh, I'm gonna go on mute.
All right, well, we got that recorded. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. And actually, you got a little soundbite from the Duke of Albuquerque there this morning. So you actually know he is a real person. Anyway, our little Daily Brief recap here. Actually, I spent a lot of time in the Daily Brief today talking about PMA, talking about vetting setups. Obviously, a bit of a challenging market for all those people that are interested in altcoins and trading stocks and stuff. Big message of today, of course, is I have yet to ever meet anybody in the stock market who's right 100% of the time. I've been at this game for 30 years, never seen it once. I don't think if I do this for another 30 years, you're going to meet somebody who's right 100% of the time. So it just goes to show that, capital preservation is a huge part of this game. If you are trading, then you have to identify risk levels that you are trading to. And if those levels get broken, you have to lady up trading.
Look at that.
Then
We're live on YouTube
you
now.
have to identify. I wonder if that video is going to be cut off there at the beginning, but hopefully it works okay. But isn't that interesting? Today was the first time I didn't wait for YouTube to kick in there to get going talking. And of course, now probably the video screwed up, but oh well. We had to spend a lot of time today talking psychology today, which makes sense. I mean, it's a trader's life. Nobody said this was easy. Sometimes you have to accept the simple fact that your thesis was wrong and you have to obey your plan and get out. I put together a cute little chart deck for you guys on the free video to summarize what we're going to talk about here just with the public. As always, we should start with the good old greenback, sort of US dollar hegemony, all that kind of fun stuff. We've been talking lots recently about, when we look at like shorter time frame perspective, what's happening here in the short term. Today, actually, I took the opportunity to zoom out a little bit and just simply ask, where are we in the big picture? And some really interesting levels jumped out at me here. I'm a big fan of multiple reasons to consider taking trades, and been sort of talking recently about how U.S. dollar is still pointing up, and I don't think it's in our best interest to get in front of that. And then I zoomed out a little bit on the weekly chart, and I just sort of said, well, where are we in the big picture? And sure enough, what a surprise. Here we are working our way up into reload zones. What a coincidence. And also, too, which was really cool about this is, level twoers just did horizontal support and resistance. So they should be tricking out their charts. And notice we have some pretty important key highs here coming up. Also notice, too, against the original market's top, we could actually even argue that that is the actual fail level on the US dollar from back in 2017. So that level starts playing an important role. And then also notice, too, holy Jesus, there's a hole on the weekly charts. And there's actually also a cheeky little gap right up top here, too. I don't know whether you can see that on the weekly price charts. So, when we always say, if you're ever thinking about doing a trade, try and, have three unrelated reasons for considering taking a trade. And I always like trade location as sort of your first primary, most important reason. And you can see based on gaps, on original market structure, on horizontal support and resistance, on reload zones, that trade location seems to be up in this area up here. And then also, too, which I thought was kind of cool, like keep these numbers in mind, right? Oh, and gee whiz, what a coincidence. Big, fat, round number, right? Markets love to race into big, fat, round numbers. Sitting at 99.62, what are the odds that 100 even is acting as a magnet? I think actually pretty good. As well, today I put out a tweet. It was really interesting to see this gentleman, fund manager, hedge fund manager, whatever. He put out a really cool report, and go and grab this on the Twitter feed. if you want this data. I thought it was really cool. Where, why are people owning US dollars? Well, one of the major reasons why they're owning US dollars is because the Americans are paying far better rates than anybody else in the world. So there's a propensity to keep your money in US dollars. We had a couple really interesting little AB equals CDs and a harmonic patterns, also suggesting that sort of 99, 95, 100 area right up in there. So even on the short term, there's impetus for the market to move up into that level. But it was just interesting looking at this person's study. And it turns out that usually when the Americans' rates are higher than everybody else in the world, we end up going into recession. So you can see this is American rates are 100% all above everybody else. Recession, 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 recession. Didn't even get up to 100%, got into the 80s here, dot-com peak, recession. Again, Junior Bush, up into the 80s, recession. And so here we are sitting at 100%. What are the odds of recession? I'd say pretty good. But also, too, does it make sense why the US dollar index is moving up? I think this is a compelling argument. There's no reason to own any other currency around there in the world. The Americans are paying you higher than everybody else. Everybody's going to go buy US paper. And we know that US paper by default is sort of like your fear proxy in the marketplace. So, interesting conversation we had about the US dollar here today. Stocks, you've heard Brian moaning and complaining recently. I mean, I do have a short trade on. I got 2 puts. I wanted to have 4. Interesting how you can even see here on, this is off of the E-mini futures contract. This high here was 325.75. This high here, 324.50. So technically, this is actually a weekly inside bar failure. That's a sell signal unto itself. So, risk on, risk off. Risk on took a real punch in the nose there over the past couple days. And the technical damage is being done here. The problem that I have here is, and I've talked to you guys repeatedly about this, I can't sell down markets, right? Institutions buy down markets. So if I was going to try and get on another short, what do I have to do? And you notice this cheeky island top. Notice the cheeky island top up here. Market worked its way lower, then ratcheted right back up. Same sort of thing, cheeky island top up here. If we can get somehow some sort of counter trend rally back up to fill in this gap, that's actually when I can start adding to the trade a bit more. But for the time being, I'm just sort of sitting on what short position I do have and just, waiting. And of course, if this market just does crap right out, then I'll just ride the current short position that I have. On the flip side, our risk off proxy, these guys all caught pretty nice bids, and I've been sort of talking about how I wanted to hunt short setups here. Market never moves in a straight line. It's back and forth, back and forth, back and forth. So we had a big up there. Shouldn't surprise us that we're having a bit of a down here. We did get up into reload zones here, but this gap, kind of like what I just showed you on the S&P, is still wide open here on the gold ETF. If we can work our way up into this area, fill in this gap, put in an M, then I can start shorting. Right now, I'm just caught in limbo right now, but clearly, our risk on, risk off kind of conversation, I'm actually starting to see that the market is sort of recovering from the meltdown that it experienced yesterday, and you can see that all the risk off proxies are all coming back down to earth here a bit. We'll see how this goes. Only time will tell. My hunch is that these guys all still need to work their way higher, fill in the gaps in gold and stuff like that. And we do have these rolling tops here on things like stock markets. You've heard Brian talk about the 25th as my cycle pivot date. So I am thinking risk off. These guys should do well over the next few weeks, and risk on should come back down some more. So we'll see how that goes, but only time will tell. I never got around to it today, but really great analogy of the blatant manipulation around the markets, around options expiry. We talked a little bit recently, and you can check out my tweets about how Wall Street kind of finessed oil higher here to make sure that all those put options expired worthlessly, and then right on the other side of that expiration, boom, 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 down goes oil. And I think the natural path of this thing was lower. You can see there are cheeky gaps all the way down at the bottom here that need filling in. Bottom of value, AB equals CD. I don't see any reason why oil shouldn't be down here. I think the only reason why oil did get sort of encouraged higher, let's say, was because of that options expiry. And keep in mind, that was a quadruple witching, so that was a pretty darn big event there. Moving on. Let's head on over to crypto now. Obviously, everybody who's crypto related is like, oh, Jesus, here we go. Bitcoin did break. Gotta toot my horn. I mean, it was very difficult to step in the face of, no, wait, man, Bitcoin's going to $300,000. You're an idiot if you don't buy. But Mr. Gann sure looks like he was vindicated. There is Mr. Gann's 8501. Here we are sitting at 8362. And in essence, within 1 week of his time window, my hunch here for the whatever it's worth. I mean, first and foremost, we have to acknowledge there is one big fat M now staring us in the face here. This high was higher than this high, so I was thinking uppy. That's got to go off the table now. And what was really interesting too, I mean, people sort of attributed this dump to, I think it was something like $1.2 billion of crypto. Bitcoin was moved to an exchange and liquidated. We had talked recently about how, I could understand sharks going in against these lows and taking long shots. Had they, you better have gotten out of that position on the break of these lows. That's gone now. I also distinctly remember I'd said that I had a really hard time thinking about buying against these lows with this inside bar failure. And I've been putting out charts and tweets, basically pointing that setup out. Full disclosure, I was short through here. This one candle here had me walk away. Had a small profit on the trade, but then, interestingly, we also talked about how we inside bar failed, and this was a diamond literally the next day. And then that literally set up this dump event. It was interesting too, and going back to Mr. Gann, my hunch is that price is going to play with this 8,500 here, and over the next few bars, you're going to see price swing either a little bit below, a little bit above, a little bit below, but ultimately it's going to oscillate around this 8,500. And I noticed that things like OKCoin forwards, they did hit these AB equals CDs. OKCoin forwards went all the way down to 7,500, I think it was. Yeah, 75. Come on, 75.60 was its low. So it did have its ABCD objectives hit, but I noticed that the cash market has not yet, right? So its ABCD target was 79.39. You can see how we're just sort of messing around here at the bottom. But as I had sort of said off of that weekly chart, my hunch is we're going to be oscillating around this level for a while now. So I also said too that I wouldn't be surprised if people coming in on the short side here, they're going to get played with. Now we might get a dump right down into this mountain man level, 7,200, then it jackknifes right back up. I don't know where the ultimate low is on this. If this happens to be the low, I'd be a bit surprised because, like I said, those AB equals CDs haven't been fully hit yet. But if this is the ultimate low, believe it or not, what I'm actually going to be expecting on the other side is we're actually going to rally back and we'll have to do sort of a natural kiss of this fail level. I fully expect that. But interestingly enough, and again, I don't know where the bottom of this is, so this is still just conjecture right now. But when we do actually eventually turn, believe it or not, I actually think over the next 2 months that we're actually going to work our way right back up to the 50% level. We'll see how it goes. Certainly no trade idea here yet. We're way, way, way too early. Now, as we're sort of working through that bottom, and I'm talking way too much, I probably should wind up. In fact, yeah, I'm going to wind this video up here shortly. Been talking too much. You know, just as sort of an aside, like we didn't really have anything. There were some interesting little short setups here. If you were aggressive, like I said, I think I even put on this message. If I was on my game and I was kicking ass, I totally think that was the trade level. I missed it, loser. But there's the end result. Still think we could work our way down into these AB equals CD objectives, but this is going to be really messy. And you can already start to see the tails. And I did, just for fun this morning, sort of say, okay, well, if this is a pivot, maybe this is an Adam and Eve. But the problem is, Adam and Eve, you got to see this W come in. And notice we rallied right up to that level, 84.64. We hit a high here of 83.91. And then 83.97, beg your pardon. And then we just rolled over again. All right, and then we rallied back up. So we're doing a consolidation here. This could easily break either way. And if we look at the higher time frames, there's no real reason to be bullish here. So, you know, does this thing actually bottom here? I think you'll know if Coinbase goes through 84.64. Then we've got a bit of a base to work with here. But that's still, the jury's still out there. So, can't really call bottoms just yet. And like I said, things like these cash markets, they have not hit their AB equals CDs yet. So, you know, sort of finish off our conversation today. Other cryptos, you know, this we talked about the Litecoin trade getting busted out yesterday. This trade, this I think is a good example of why I like to apply the bot trading rules to these L tangonators. You notice that, and I have been talking a bit about this recently, so I hope people in the public were listening. But notice that we had 50% of the move traded to. I heard some guys were shorting this inside bar fail. Way to go. I was leaning to the long side. But at the very worst, right, in this case scenario, you move your stop to scratch on the 50% level tag of this anticipated move. And you can see yesterday through the dump, you should have been liquidated at scratch. So remember, a lot of this conversation is about capital preservation. You have to follow your plan. You have to follow the rules. And if you had to get out at scratch, then you better, you know, lady up, as we say for Colleen. And obey your plan. And sure enough, you would have avoided this mess here. You know, one stock that I'm playing this market through is my Riot. And you can see how she's basically come right back down to the original bottom. I'm within probably about 10 cents of getting liquidated here. As I've said repeatedly to you guys, if this fails, I'll walk away. It's just the way it goes. It is interesting how we had this gap that needed filling. We have these key lows. We're basically playing with these key lows. My stop is just below here. So it just, you know, it just goes to show I might have to take a loss on this. It's a trader's life. And that's what this sort of state of crypto is right now. I don't know what's going to happen with this. I honestly don't know. That's why we build plans. And it was weird with Kevin earlier before we started recording. I had sort of said, you know, you'll know that you'll get to the place where you're a professional in the marketplace when you can build your plan, vet your setups, trade your setups, and just let go. And just say, look, if this breaks this low, I'm gone. That's the way it goes. If the 50%, 50% of the move is traded to, I move my stop to scratch. And if it trades back to scratch, I just walk away. So that's the sort of market state right now for crypto right now. Certainly don't have any new buy signals. A lot of the individual crypto names are coming down and breaking bottoms. Capital preservation. All right, obey your plan. A lot of stocks that I'm interested in, they're coming right back down against key lows, and I may have to liquidate them if we break down. All right, so there's your market summary today. I hope you enjoyed that. I have no idea how long I was. I'm sure I talked way too much, but there was a lot of stuff that we needed to review here today. Have yourselves a great day, everybody. All the best, and bye for now.